and what we are seeing in terms of infra build out. So, fairly optimistic.
I think that's a good word to take a cue from. Nirav, I want to start by one space that's not been too optimistic, at least in terms of business updates, and that was the rural economy. Do you think that's gaining momentum? Because early signs not yet showing substantial recovery.
So you're right. So if you look at the rural wages, the real rural wages, they've lagged. They are just close to about nil. They're just keeping up the pace with the inflation and all. But if you look at the anecdotal evidence, so if you look at two-wheelers, for example, they have come back very smartly and understand that large part of that demand is happening coming from the rural. You obviously had some amount of mix-up that has happened because of the pandemic and the reverse migration that you've seen in the rural area. I suspect that the momentum that we've seen in the economy is so strong that is going to lift even rural economy. As a matter of fact, the theme going forward, I would like to believe, will essentially hinge around two things. A, it will hinge around the fact that you'll have very, very strong corporate capex cycle that will pick up very soon. I'm talking about 1 or 2 quarters down the line. And secondly, you will see a more even balance between urban and rural consumption. As a matter of fact, I think there was an article yesterday or research paper yesterday by the research department of SBI, and they have got access to large amount of data points, which sort of debunks the myth about a K-shaped recovery. I tend to believe in it, but I don't have too much of evidence outside what we see anecdotally.
Right, Nirav, hi, Tamanna here. Great to speak with you on India Market Open. And I just wanted your take ahead of Q3. I mean, that's the big trigger right now, all things being equal. We know Indian economy on an upward trajectory, relatively looking well, strength, etc., etc. But the question is, how companies are going to deliver on everything they promised. A lot of sectors saw management come and tell us that H2 is going to be better and Q3 is going to be, much better and fabulous. What are the sectors and companies that you have your eye on, Nirav?
So I think what stands out very clearly as far as the delta, if you look at the delta, then you are going to see a significant amount of delta that happens in the cement sector. And a lot of this is base comparisons and the fact that you've seen a price correction in energy and coal and stuff like that. So the commodity basket as a whole will obviously be favorable to the importers of commodities. I believe that the earnings blowout in banks will continue. I think there are a lot of misconceptions around the impact on the NIMs because of the rate cut cycle, or people are unduly worried about the pace of deposit growth rate. Will take it forward if time permits. Banks will stand out, cements will stand out. So outside commodities and outside consumer companies, which are largely rural facing, I would expect that we'll have a decent amount of earnings growth that happening.
In terms of sectors, Nirav, IT, a mixed sort of an outlook. The outlook is gloomy, but the street seems to be to think that there is an upside there. And you spoke briefly about banks, but just a little more detail on the financial space and what looks promising there.
So I'll tell you, if I come to software, I agree that we are looking at a subdued quarter and maybe even a subdued Q4. It doesn't matter because I've always believed, and I've been vocal about this, is that you need to be slightly more macro conscious about when you take calls on the software sector. We have seen how the US market is very, very resilient. You just look at the payroll numbers that came out on Friday, right? So even the bond yields over there are sort of playing a bull and a bear dance between how strong the US economy is and is not. A lot of spending in tech is discretionary, which means that once you get confident that Fed is behind the cycle, you are going to see a lot of catch-up in tech spending that will happen. So it's important that you look out in terms of what happens.
Looking for home interiors? My pick, Home Lane. They offer free consultation in 3D design.
In banks, I think broadly, I can't call out any one particular bank. Almost all of them are growing their credit at about between 16 to 18%. Private sector banks are growing a tad faster. Absolutely zero concerns around asset quality. Even the SDFC merger into HDFC Bank has been absorbed. They are high on liquidity coverage ratio, and therefore, I don't think you're going to see any disappointments on earnings. You could have one-off companies here and there. I'll be surprised if you can catch a trend out of that and say that, my expectations are these, and, the sector has disappointed. Please appreciate, we are still upgrading our GD estimates for this year as well as for next year, right? That happens because there is business momentum. And business momentum, when it continues for a while. You need an exogenous shock to try and reverse that trend.
Absolutely. We'll continue this fantastic conversation with Nirav. Q3 expectations and a lot more after a very, very short break. Stay tuned.
Hello and welcome to NDTV, India's most trusted news channel. I'm Vishnu Shah.
And I'm Nirav Sheth. And we will bring you the latest updates from the World Economic Forum at Davos, Switzerland,
where the world's leading thinkers are gathering to discuss some of the most pressing issues of our time.
From climate change to digital transformation,
from health to education,
from trade to security.
Davos 2024 is the place where the future is being shaped.
And we are not just reporting the news, we are even making it.
Starting from the 15th of January on NDTV 24/7 and NDTV Profit.
Brought to you by Kent देता है सबसे शुद्ध पानी. Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others,
Welcome back. Market's still quiet, but Electra, which was one of your big gainers yesterday, is still continuing to do really well this morning as well, up another 7% of the stock. But we have with us a very special guest on an important day, where just ahead of earnings is Nirav Sheth. Nirav, I want to talk to you about the real estate sector. There's been so much of excitement around the stocks, at least in the last few months. And usually we've seen that, it's the financial markets that most often than not fuel the rally in terms of real estate. We seem to be the start of the cycle. The cycle usually lasts 7 to 8 years. We caught up with a few managements and everyone's very optimistic on the top line. But my question is on bottom line, right? How well are these companies going to do in this quarter? Because while sales are at a high, I'm not sure whether discounts are happening. Cost of land has gotten more expensive. Cost of construction has gotten more expensive. All that and more would mean that real estate earnings may not keep up. Is that a concern you have, or you're thinking otherwise?
No, I don't buy into that view. First of all, it's futile to look at earnings in any one particular quarter for any real estate companies. They have a completed projects accounting method, which means that it's a slightly technical, but let's leave that aside. What you want to focus in the cash flows. So even if when you talk about the cost increases, I think there are two big things that have happened in real estate, and a lot of this is hindsight. There's a big macro reset because you got RERA and stuff like that, but also micro reset. And when I'm talking about micro reset, I'm talking about the fact that how the companies are being run. When you go back and you've been in the market for a long period of time, and when you look at the last bull market, you had an absurd amount of price increases. Funny prices being paid for land, and then you launch the projects and then take price up by 10%, and then your investors coming in. That process has cleansed, right? Now you don't see. You just look at the last 6-7 years. Your increase in prices are sub-inflation, somewhere about 5 or 6%. Right, your cost inflation is roughly about 4 or 5%. I think I was just hearing Mr. Lodha yesterday about what is the cost inflation. I'm going by that barometer, which means that this is a very, very steady growth rate, which means that even the builders and the real estate community is trying to do a volume churn out and not necessarily sit on inventory and price gains price gains. So I'm not too worried. I don't see anything right now that tells me that there's a disconnect between the free cash flow growth rate or the cash flow growth rate and the volume growth rate that you're seeing in real estate.
Estate stocks, are you more constructive on than Nirav ahead of earnings? Or just generally, actually, it wouldn't be fair to just, pin it down to this quarter?
You're talking about sectors or within
the real estate sector?
Yeah, so we don't cover real estate right now. I don't have an analyst, so I won't be able to do justice to your questions. But like I said, it is more of a generic call. India's story right now is more of a generic call about sectors and broad spectrum of companies doing well, rather than trying to pinpoint one particular company. There are obviously differences in valuations and all.
Yeah, so that brings me to my next India story. Is it still the right time to take fresh entries into the defense space? They are expensive, they're stretched, but this is the big theme and talking points. If one hasn't acquired stocks in the defense pack, would you recommend it at this stage?
See, I think that, all of us have been ingrained to think like and value investors. All of us want to have margin of safety, which means that, we want to cut the cake and eat it too. You want to make investments and have 15% return, right? But you have to deal with the cards that are given to you. I completely agree that expectations are very high in some of the sectors like defense, the EMS space and all that. I still believe that if you approach it as a portfolio, which means that you buy a basket of companies, right, and don't have an excessive weightage within the portfolio, that basket will outperform the index for the next 5-7 years. You have to take a long-term view, but those opportunities are huge, right? And those addressable markets are real. You are essentially taking an execution risk, and there is no way for you to try and build that in right now on one particular company. I think a portfolio approach will help. That is the best answer I have got.
Nirav, you spoke about ahead of Q3 looking at the big picture and the sectors. So let me get that big picture from you. And I was also keen to know what you think about the auto space. This is a space which has been plagued with the story of first passenger vehicles working, but not two-wheelers. Now two-wheelers are catching up, but entry-level passenger vehicle sales are looking a little tepid. Tractors impacted by rural. So little detail on that, and of course, the sectors that you think will perform the best in Q3.
Well, right. So our view is that the sectors will do well, but there'll be earning divergence between different sectors. So we are very, very constructive on two-wheelers, and we've been constructive on two-wheelers for a while. It's not that something dramatically has changed. Two things. You are 30% of the peak in 2019 in terms of volumes, right? So you are going to see a very, very strong cyclical recovery. A lot of that downhill in volumes was because my prices went up by 40% in that transition that happened from BA4 to BA6 and then this commodity price reset. As incomes catch up, you are seeing that volumes coming back. Within that, there is premiumization. Most importantly, you had this huge concern around the pace of adoption in electric two-wheelers and new competition. Incumbents have come back very strongly, right? So that is behind you. So two-wheeler is a very, very nice space to be in with no competitive risk. Now you come to passenger vehicles, and you are exactly where two-wheelers were 3 years back, which means that, yesterday we just read about these Vietnamese companies trying to commit $500 million and getting into electric vehicles. So you got a new set of competition, and large player over there is obviously Maruti, and that you got Mahindra. There are so many variables over there, you don't know how it's going to play out, right? I cannot have any great confidence to say that, in next 5 years, this is where Maruti's margins and cash flows are going to be, Mahindra's cash flow and margins are going to be. When you don't have certainty, you try and beat down, you try and increase your margin of safety by saying that I'm not going to pay so much of valuations. So we see a risk to valuations in the passenger car segment. I'll lastly talk about commercial. Railways is a big part of that. If you look at the targets of the government, very, very ambitious targets in terms of the recoup of the railway freight, right? Which means that you want to go from about I think 25% to 40% in 8-9 years. Serious investments happening over there, which means that you are not only probably at a peak of cyclical recovery in commercial vehicles, but there could be structural problems as well going forward. So there again, there's an element of concern because of what is happening, and everyone wants to reduce the cost of the logistics. That's a big thing for the government. Net, I'll single out two-wheelers, especially given the valuations and where they are in the cycle.
All right. And you know what you're saying on railways is absolutely correct. The infra boom that we're going to see after the DFC is completed and you have this rail makeover is going to be at a different level. Thank you so much, Nirav, for speaking with us. Great speaking with you
Pleasure.
this morning. We'll take